All right, everybody, welcome. This is a simulation session. We're going to go over gold during the London session. So it's just going to be very basic ideas that we're going to be talking about. The first thing is going to be we're going to be identifying the most recent zones, and then we're going to be identifying if we break those most recent zones, where is price most likely to go. Right. One request I want to make to everybody is to keep your questions to yourself. No matter how much you want to ask that question, just keep it to yourself. Every question is going to be answered without you even asking. Trust me on that. Don't even bother typing it down because it's going to be answered as you move along. And if you think that the question is going to be skipped, don't worry. It's still going to be answered as you move along without you even asking them. So before we do that, let's do some random calendar dates. All right, random calendar dates. All right, so we're gonna choose 10 dates. We're gonna go from it's gonna be, let's start with March 2020. 2020 was a very volatile year, extremely volatile year. And we're gonna go till June 30th June. There we go, 2021. We only need Sundays because Sundays is when the market opens, and we need all right, let's go. So we're recording. Perfect. Get dates. All right. So we got April, we got May, we got December, November, May, we got May again, March. Let's do November, right? November 29th. November, we're good with that. Any suggestions? April? How about April? Very recent. Then we got May. Okay. Nothing. May. All right. May. Let's do May. 24th May. 24th May, nice. Great choice, my birthday. 24th May. 20th May, basically. Okay, so what was this again? 24th May 2020. This is going to be very volatile. Alright, so new simulation. We're going to go towards gold. We'll go to 2020, May 2020, 24th. We're going to start with what? $2,000? Let's start with $2,000. We're going to go to New York close. Leverage is going to be our favorite 500 leverage. Spread is going to be fixed. So we're going to use, how much spread we want to use? We want to use a 1.5 pip spread. Actually, let's use a 1.8 pip spread. Oh, 1.8 pip spread. This is how many days back you want to look, so we're going to choose 150 daily candles back that we want to see. All right, let's do this. So let's bring out our charts. So we're going to start with the weekly, and then we're going to start with the daily. We're going to start with the 4-hour. We're going to start with the 1-hour. And slowly and surely we're going to go up and up and up and up. 30-minute and 15-minute. Oh, 15-minute right there. So we're not going to use the 5-minute because, I don't know. We're not going to use the 5-minute because 5-minute is very risky. It takes a lot of confidence and practice to execute on the 5-minute. So we're going to just be focusing on 15, 30, and 1. And we're going to be looking at biases based off of 4-hour, daily, and weekly is just going to be there for fun. All right, awesome, perfect. So we got this set. All right, perfect. So let's take a look over here. So if you look at the time, right? So basically we have a gap, right? So we have a gap over here, so whatever. So if you look at the time right here, if you're looking at the simulator, or if you're new to the simulator and you just got this, and if you look at the time, this is 6 p.m. Eastern, right? So what we're going to do is we're going to start off till, okay, let's do this here. Let me bring up some text. So this is going to be 1:30 a.m. Eastern. On simulator time is going to be, can you share your screen? What? Screen is shared. Screen is shared. Come on, man. Okay. Simulator time is going to be 2, it's going to be 10, 8:30, 8:30, 100 hours. All right, perfect. So this is what we're going to do here. So let's change this over here a little bit. Let's change this color to blue. Oh. All right, let's change it to blue. Perfect. So let's go over to the, okay, 1 hour chart. All right, so this is 3, 4, 5, 8. This is 800 hours. And then this is the, okay, so we're going to start with 1 a.m. Everyone able to see Raja's screen? Yes, screen is shared. Okay, awesome. So this is an hour and a half before London Open. So what we're going to do is we're going to take a look at the weekly time frame here, and we're going to see what's going on. So looking at the weekly, we can clearly see, okay, before we do that, let's bring up our view, toolbars, line studies. Okay, so we can see weekly candle rejected all the way up over here. This new weekly candle is forming. Previous weekly candle was a doji candle. It's too early to say where the weekly candle is going to go. So we're going to look at the daily over here, right? So looking at the daily, we do see that the previous daily candle, it basically created a support, right? We created a support because previous daily candle came down, we created a wick, rejected, and then the daily candle formed bullish. This is the new daily candle. If we think this daily candle is going to move up, right, and respect this support, it needs to respect the low of the previous daily candle. So let's do this. Let's bring up our scale fix. Yeah, so it needs to respect the low of the previous daily candle, right? So let's take a look on the 4 hour and see what's going on. So looking at the 4 hour, let's do another scale fix over here. We're trying to see where the London session is going to move gold. So looking on the 4 hour, now this tells us like a different story, right? And what we can see over here is that we have a support on the 4 hour at 1723. This new 4 hour candle is forming. It looks like it may continue down, but at the same time, we have some sort of a support over here too, maybe on the smaller time frame. So we got to be very, very careful to see that, okay, where can price move from this instance? So let's take a look on the 1 hour time frame here. So now looking at the 1 hour time frame, let's do scale fix again like this. Zoom in a little bit. All right, perfect. So on the 1 hour time frame, we can ultimately now see that there was a support formed, right? This new 1 hour candle is still forming, and if we do break this low, I think there's a very high probability we can continue down towards, like, you know, maybe to fill this wick right here with volume. You know, that is a very, very good possibility that may happen. So now the bias is bearish at this point, right? Unless this 1 hour candle closes back above 1727. Now it all depends on what the 30-minute candle is printing as. So let's clone this over to the 30-minute time frame. Let's take a look on the 30-minute time frame now. So looking at the 30-minute time frame, things are a lot much better over here based on price action. And the reason why I say they're better based on price action is because, let's say we have this support, right? We have the 30-minute candle closing bullish. It broke the high of the bearish candle, but it came down. Now it's closing like a weak bullish candle. So now the whole idea is that if the next 30-minute candle, it breaks the low of this current one right over here, then there's a high probability we can continue down to retest this support around 1725, it's like 14, 15 pips away. So that could be our bias at this point. So we're going to put a zone right over here in case we break the low of the previous 30-minute candle, and then we can continue on down. And that's going to be our first trade at that point. But if we do, let's say, break above the high of the previous 30-minute candle, this range is not enough to execute, right? Because this is a 13, 14 pip range. And also you got consolidation right over here. The reason why the sells are going to be much better, because we rejected this area once, and if we break this area, then we can continue down. There's a high probability we can continue down after that. So probably going to be looking at buys above, I would say 1729 for price to possibly continue up towards, let's say, 1731, 1732, and then we can start to look at those ideas over there. So let's start this off. Kickoff time. Right? Let's see if we break the low to continue down or not. It's going to be interesting to see where price moves. Oh, looks like we are about to break the low over here. So we gotta take a look at this now, right? We gotta be very careful about how it's trying to break the low at this point, because now when we look on the 1 hour time frame, the 1 hour time frame clearly indicates that there's a possibility of it breaking the low and continue to move down from this area, right? So we need to identify that, okay, if it does break the low at this point, where are we going to be able to secure a sell for price to continue down? So I think once we start breaking the low on the 30-minute, that's going to be the point we can execute a sell with stops above the current candle, and then obviously we can continue on moving down, secure whatever we want to secure, and then just call it a day, right? So let's see over here. We just got to break that low. Oh, see right there, we broke the low at this point. So this is going to be the area where we can execute a sell. So we're going to be putting a percentage. It's going to be, let's say, since it's the first trade of the week, we're going to go with 1%. Stop is going to be kept above the current candle. And we're looking at price to continue down to almost like, let's say, I mean, if we can get 10, 11 pips, I think that's still pretty good. Right? So let's see how far we can move down from here. All right. Very simple trade, impulse entry, broke the low of the previous candle, and we're starting to continue down from this point. We're up about 3 pips, 4 pips, 5 pips. Kind of consolidation over here to the left-hand side, so not a big fan of that consolidation. So we'll have to keep an eye on how this candle is going to close. The 30-minute candle is still open right here. You can see the time. We got about 24, 23 minutes left over here. The 15-minute candle will also close here pretty soon. Wow, really twitching over here at this point. Oh, left a wick. We're coming down. Let's slow it down here a little bit because we don't want to miss our 10 pips right there. Ooh, 4, 7, almost. Oh, 6, 8. See, now, this is the thing. As we look to the left-hand side, it's reacting very like it's not like a clean reaction, right? A clean reaction would have been where it would just move straight down, but at this point it's kind of like, you know, bouncing off of this area. So I think it's going to be a pretty good idea to kind of like, you know, close. I would say want to close 90% over here and just be safe, you know, just want to be safe. Don't want to, I mean, don't want to like, oh, okay, nice, so we hit it, awesome. Right, still this was a very, very strong rejection right over here, so nice. Got this move here at the London session. We broke the low, took the sell, stop loss was above the current candle, price continued down, made $15. Pretty nice move over here, you know, very, very simple. So let's fast forward this to see how this 30-minute candle is going to close. The 15-minute candle, however, is about to close, and we have the support here to the left-hand side, right, which is where I think we're rejecting. So yeah, we broke the support. Now here's the thing, we may get, maybe, I don't know, we'll see. Like, I mean, if we start closing a strong bearish candle, I think we can continue on. Oh wow, oh nice move over here. I think we can continue on moving down further to this support right here. Yeah, this is a very, very nice one. If we didn't have a TP, I think the runner would have been up about 25 pips at this point. So the candle is about to close, 54 minutes left. You know, very, very nice drop here, just as expected. Looking on the 4-hour time frame, 4-hour candles coming down to that same 4-hour support. We had a strong rejection on the 4-hour before. On the 1-hour time frame, we're still forming a candle at this point right here. You know, so see, now we're rejecting this area. You can look to the left hand side, you can see where we're rejecting, right? We're rejecting, this was a resistance first, candle broke out and went all the way back up, right? We're rejecting this area here again now, and now here's the thing. If we broke the support and candle broke down, and if there's a possibility if we can break above this area, let's clone this over, right, to the 30-minute time frame. If there's a possibility that we can break above this area, then maybe this move down becomes a fake out, right? If this move down becomes a fake out, then there's a 80 to 90% chance that price is going to go up to the next resistance all the way up over here, and there's a high chance we can break above this resistance to continue on moving bullish. Because if price can't sustain its move bearish, then there's a high probability it's going to sustain its move to the opposite side. Oh, look, we broke above the high of the previous bearish candle, and now this candle is about to close, right? And if it closes back in the range, I think this is going to be another opportunity where we can possibly take a fake out trader here for price to continue up. See, very important to wait for the candle to close. We don't know where it's going to close, so we want it to close back in the range. All right. Oh, wow, look at that. See, we closed below this area, so no trade at this point. Nothing. So now we want this 30-minute candle to close. See, nothing. We're not looking at the 15-minute. We're only looking at the 30-minute, and we're looking at the 1 hour time frame. That's it. Right? So now we got to wait for this. We got to wait for the 30-minute to close. See, if you would have taken a buy, boom, instant drawdown, deep drawdown. So we got to wait for the 30-minute candle to close. Let's forward this and see where it closes. Oh, it closed bearish. So look what's going on now. It closed bearish, bullish, bearish. Candles are printing side by side. This means price is ranging. This is the London Open at this point now. Price is ranging at this point. But the good thing is we got a support formed, we got resistance formed. So now all we got to see is whether price is going to break back above this area, or are we going to break below 1724 for price to continue down. That's something we got to look out for, right? So again, let's wait for the 30-minute candle to close. Let's forward this here a little bit. And 30-minute candle closed above the range, but it closed with no wick on the top. When a price closes with no wick on the top, it's always better to wait for the next candle to wick down, right? To wick down and then break the high to continue up. So this is what we're going to do, right? Since we had this, all right, let's take a look right here. So since we broke below support, candle closed weak, bearish, bullish, sorry, we took an impulse entry, took the trade, won the trade, right? Next candle started right here. So this is how we're trying to tell the story on candles. Next candle started, we rejected resistance, candle closed below resistance, no trade. Next bearish candle closed below this area, closed above support, consolidating, no trade. Next bullish candle, it closed above this area, but it has no wick on the top. When a candle has no wick on the top, this means there's no range for the next candle to move. So ideally, we want this new candle to wick down first so that we can know that, okay, now it's making a liquidity wick. And then when it starts breaking the high, we're going to start to take the trade, anticipating that this entire move down was a fake out. And now there's opportunity for price to continue up to this range. And if it continues up to that range, failing to continue down, then it should continue moving bullish. So that's the whole idea. We're just visualizing this area right here. And now when we look on the 4-hour time frame, it kind of makes sense on the 4-hour as well, because, you know, maybe it's rejecting this area just like it rejected before, you know. So 1 hour is forming like this, 30 minutes is like this, okay. But if it doesn't make a wick down and it goes up, then it is what it is. Oh, yeah, it is what it is. You know, missed the trade. See if it's forming this wick over here. Then that's also pretty good. Then maybe we can have the next candles to continue bullish. Oh, wow. Crazy move. See, we wanted this candle to make a lower wick and then to take a buy. But I guess it was destined for us to miss this move over here. So we're going to wait for this 30-minute candle to close now. So we're going to hit next. Okay, 30-minute candle has closed bullish. Right now, this is the better opportunity to take a buy at this point, right? Because look, if you look on the 1 hour time frame, 1 hour candle has closed back in the range, right? It has closed back in the range. We have a fake out over here. This is the perfect opportunity to take a buy and anticipate price to continue moving up to break above this resistance, because, you know, this move down is a fake out at this point. If you guys don't know what a fake out is, it's clearly explained in the database. So we're going to continue and maybe take a trade based on that. And now when we take a look at the stop loss, we're going to use our normal 2% risk at this point. So if we take a buy, our stop is going to be below the previous candle, and our TP is probably going to be above this range. This is what we're looking at for price to move on, right? The reason why we've kept the stop below the previous candle is because if we want the new candle to continue bullish, we want it to respect the low of the previous candle, right? We want it to respect the low of the previous candle, because if it breaks the low of the previous candle, then it's going to get pretty difficult for price to move up. So actually, what we're going to do is we're going to maybe increase the stop, because we may get stopped out with the spread. So we're going to increase it a little bit. Perfect. Keep it at 13, 14 pips. All right. Oh, London session. Kind of like a deeper pull down over here. Almost came close. So close. You know what I'm going to do at this point? Actually, no, let's just wait. Yeah, right over here. Gonna close 50%. Gonna manage risk and leave the rest running. Oh, we got stopped out. Very volatile over here. Let's take a look on the 1 hour time frame. We respected the low on the 1 hour time frame. If we respected the low on the 1 hour time frame, what's the probability if we break the high and then we can continue moving bullish? All of this happened in the first 9-10 minutes. Let's take a look on the 15 minutes. 15 minutes also rejecting. This is the 1 hour high right here, 1729. That's the 1 hour high. So we're going to clone this over to the 1 hour, and let's go towards the 30 minute. Yeah, perfect. So now we're going to give our trade a second chance. We've taken 2 trades so far. One was a sell, winning trade. Second was a buy. Buy got stopped out. And if we can break above this area, 1729.20, I think we can give our trade a second chance for price to continue moving bullish. But I guess we're not going to do that because it's a Monday. So we're not going to participate in that over trading situation over here. So let's forward these candles. So now actually we want to see if we break the high to continue moving up or not. And then we're going to move on to the next session. Next day. So this was Monday, and then we're going to move on towards Tuesday. There we go, broken above the high. Now paper trade would be to take a buy at this point, have stops below this previous candle, and expect price to continue on towards 1731. That would be the paper trade. If this was Tuesday, Wednesday, may want to give the trade a second chance, but it's Monday, so we don't want to participate in over risking. Low risk buy, no, we're probably going to just do the paper trade over here. So let's forward the candle here. Oh yes, it did move up, came down 13 pips, and let's move on here further. Oh, crazy volatility. Oh my god, so intense. Look at this 1 hour candle over here. All right, let's just skip this and move on towards Tuesday now. Okay. Holy, was there news? I think there was news. Past events. No news. Just crazy volatility from gold. It's just nuts. All right, let's move on. Okay, so 2, 3, 5:30, 6:30, 7, 8 a.m., 8:30. All right. Pre-London session once again Tuesday. Insane moves on gold. So now looking on the 4 hour time frame, it's very apparent that we are making higher lows and higher highs, right? If we look on the 1 hour time frame here now, we can see we are clearly making higher lows and higher highs. We can see this 4 hour candle strong bullish. This is a higher low. We have a higher high. We have a higher low. We're expecting this price to continue moving bullish as well. So we gotta make sure that are there any confirmations on the smaller time frames for price to continue up, right? So let's take a look over here. Let's remove all analysis on the 4 hour, and let's move on towards the 1 hour here. So moving on towards the 1 hour time frame, we can see that the 1 hour time frame candle is coming up over here. So now what we got to do is we got to identify that does this mean that we're going to continue moving bullish, or does this basically just mean that we're just going to start to consolidate at this point? Because it's very, very choppy at this point, and we want to make sure that we don't want to get stuck in any sort of like choppiness. So if you look at this price over here at this point, 1 hour candle is closing below resistance, right? If we're closing below resistance and we're creating a support right here, the only thing we have is that, so if we remove this area here, remove, let's remove this zone over here as well, right? So now only looking at the 1 hour time frame, we have the most recent support at 1732, and we have the most recent resistance at 1734. We go 1334 and 1732. And we do know that if we do break below this support, we have clean candles to the left hand side, and there's a high probability for price to continue down, right? Continue down to probably this support right over here, because we got clean candles to the left hand side. If we break above this resistance, then there's a lot of choppy behavior all the way to the left hand side. It's going to get very, very difficult for price to move through. So we're going to move on to the 30-minute time frame and see what's going on the 30-minute time frame. So 30-minute time frame shows us some more information. We got a resistance forming right over here, and if we have this resistance forming at this point, we also have some sort of a support forming right over here as well, 1732. Right, so let's remove this analysis right here, remove, and let's just focus on these areas at this point now. So all we want to see is price to break above 1734, and then we want to see price break below 1731. So now we got to take a look at that on the 15-minute time frame and see what more information we can get on the 15-minute time frame. Let's move on to the 30-minute, and we want to clone this over to the 30-minute time frame. So right now we're just doing high time frame to low time frame breakdown. So I'm clone this over to the 30-minute, 15-minute time frame. Okay, so 15-minute time frame has a much, much better support right here. Very, very clean, right? And clean in the way to say that if we break below, let's say 1731, 1731.68, we can come down to fill this wick, and below this wick, we can continue down further to fill this area at 1728, right? So because mind you, this is a minor support on the 15-minute time frame at 1730. So we're looking for price to break below that area on the 30-minute and to continue moving down. So let's just wait and see how the candles form. Do we break the high or do we break the low? That's the question. That's the question we are asking the market here now. Do we break the high or do we break the low? We're still in this range here, consolidating. We haven't really moved anywhere. This candle is about to close. Pre-London session is about to start. Oh, wow. All right, almost. We almost broke above that area. So now we are still coming down. We have to wait to see how this candle is going to close, this 30-minute candle. The close of this 30-minute candle is going to tell us everything where price is going to move. We're still consolidating over a very, very, very difficult, well, not difficult, but like a delicate situation at this point. Look on the 1 hour time frame. Look at the 4 hour time frame. 4 hour time frame is not breaking the high. It's not breaking the low. 30-minute time frame is just forming. This wick down over here, this is the low of the 4 hour, right? Right over here. This is the low of the 4 hour right here. If this 4 hour candle, it breaks the low, then there's a very high probability we're going to continue down towards 1723, which is a 64 pip range. If we break the low on the 4 hour, right? Remember this, because this 4 hour candle hasn't broken the high of the previous candle, hasn't broken the low. So if it breaks the low, we move down. If it breaks the high, we continue shooting up. Yeah, so that's the whole idea. So we're going to wait and see how this candle is going to close. The 30-minute time frame candle is about to close. Let's see here. Let's see how this candle is going to close. Let's forward this. Oh, it closed right at support. So if this new 30-minute candle wicks up and breaks the low, I think we can continue moving down. We needed to wick up first before breaking the low. Oh, it's breaking the low here first. All right, there we go. We've broken the low. We're coming down. There's this minor rejection right here. I want to be very, very, very careful with this area right here. I want to be very careful. Very, very strong rejection area at that point. Let's take a look on the 15-minute time frame. Oh wow, rejection on the 15-minute time frame. Let's see how this candle closes here. There we go. Candle has closed bearish. 30-minute candle has also closed bearish below the support. This is beautiful now. This is amazing, amazing, amazing instance where we can take a trade. So what we're going to do right now is that, so now if we all can pay attention, right? We had support on the 30-minute time frame. We had rejection on the 30-minute time frame. 30-minute candle broke below the support and rejection. There's a very high probability we can continue moving down, right? We can continue moving down towards, maybe we can look at, 1726. Now, we're going to talk about a stop loss. Our stop is going to be around 20 pips. So we're going to go with the 2% risk over here. Actually, we're going to go with 1.5% risk over here. We're going to take a sell. Our stop is going to be up at this point right here on 17, 18 pips. We want to keep it in the middle of this range. Would you wait for it to wick up first? See what I said? We got to wait for the questions. All questions are going to be answered. Everything. Right? So we're going to do this right here, right? So since we're using a 1.5% risk, what we're going to do is we're going to add another position, right? And that position is going to be added if the candle wicks up and then starts breaking the low. That's going to be our solid confirmation for price to move down. This position is being taken only because of the fact that candle broke below support and the stop loss is kept well within the range, because if we broke below support, and if you look on the 4-hour, 4-hour looks like it's about to break the low, so the bias is sells at this point. Looking on the daily, daily is ranging whatever, we're ignoring the daily, right? We're only focusing on the 1 hour. Oh wow, look at this 1 hour candle also closing like this, right? So we're going to add a position if price can wick up and then continue down. That's when we're going to add another 0.5. See this? We're wicking up. Oh, missed it. Yeah, missed it. Missed that trade. Oh, 20 pips over here. Very nice. 20 pips, so we're going to close around 70%, and we're going to leave the rest running at break even. Probably going to remove take profit over here. Wow, amazing move. Holy, still running at this point. 0.4%, 0.5%. We're running at 30 pips over here. Nice, 25 pips. Yeah, if we would have added another position, it would have been solid gains, but this moved really, really fast. So let's see how the 30-minute candle closes here. 30-minute candle closed strong bearish candle. We're having some sort of a retracement. So now looking on the 4-hour, there's a very, very high possibility we're going to continue down towards 1723. Extremely high possibility. The only thing is, are we going to get stopped out on certain scenarios, or what's going to happen? That's what we got to identify. So let's see how this candle closes, and then we're going to see if we can add another position to this trade here or not, for possibly a wick fill over here, only based off of the 4-hour time frame. So this is going to be something I've seen before in the charts, and we're going to be executing based on that. Okay, perfect. So look at this, right? 1-hour candle closed. Let's take a look on the 1-hour candle. 1-hour candle closed below support. We made a lower low. We made a lower high. We rejected the support. Looking on the daily time frame, daily is whatever ranging. 4-hour time frame has broken below this low. So now this is very important, right? A very important sense of visualization at this point. So 4-hour candle still has some time to close. 4-hour candle broke the low, came down, rejected, right? It still has about, I say, 1 more hour to close. So I want you to ask yourself this, right? What's the probability, and I want answers here in the Zoom chat, what's the probability that this 4-hour candle will continue driving down versus what's the probability it's just going to shoot right back up and go bullish? What's the probability? Higher probability to go down. Higher it will go down. Okay, perfect, right? So let's just stick with that idea. There's a high probability it's going to go down. It's the same thing as when you have news events, price moves down, retraces, and then continues to move down. This is the same idea over here. So now we're correctly visualizing that there's a higher probability it's going to go down. So now we got to break down that probability on the smaller time frames to see that, okay, what can we do on the smaller time frames to indicate it can move further down. So let's take a look on the 1 hour time frame right here. So now if you look on the 1 hour time frame, don't you think it's going to be a better idea to place the stop above the previous 1 hour candle and anticipate this 1 hour candle to continue down to fill the wick when we're visualizing the 4 hour candle to drive down, right? That would make sense on the 1 hour time frame. So in that case, we're not looking at the 30-minute time frame, we're not looking at the 15-minute time frame, because we're deriving all our bias off of the 4 hour time frame only, right? So we're only going to look at the 1 hour time frame, and this is something I've seen in the charts before, right? So what we're going to do is we're going to use a full 2% risk because the previous trade was a winning trade. We're going to go for a sell. Stop is going to be kept above the previous 1 hour candle, and we're going to anticipate it to continue driving down towards 1726. Maybe remove stop loss over here, and yeah, that's it. So now this trade is taken on the 4 hour time frame based on the 4 hour visualization, but we're taking this off of the 1 hour price action, because if we want it to continue driving down, we don't want this 1 hour candle to break the high of the previous 1 hour candle. So if we now look on the 30-minute time frame, 30-minute has now broken the low over here. It broke the high as well, which was a little bit of a noise. So yeah, I guess on the 1 hour time frame, it should continue driving down at this point. We're running at about 27 pip profit right here. If we break the low with volume, because we're running at, you know, London session, I think we can have a much higher probability to continue bearish over here. So if you look on the 4 hour here, nice. It's running nicely over here as well. 1 hour candle still open here. So probably right at this point, 25 pips, we're going to secure around 90%, and we're going to leave the rest running at break even. So see, we didn't look at 30-minute, we didn't look at the 15-minute, we only looked at the 4 hour, visualized the 4 hour, and then we just focused on the 1 hour to see where we can execute the trade. And perfectly well, it's coming down at this point. Let's see how this candle closes. Candle closes bearish. Now we're at the support. We have a runner running at this point. It's running at 40 pips, 37, 35 pips. Let's look on the 30-minute. Let's just keep the stop where it is. This is the start of the new 4 hour candle. Looking at the 4 hour candle, we have this wick to fill to the left hand side, and let's see whether this 4 hour candle can continue moving down here further or not. So let's skip this 30-minute and move on to see where this 1 hour candle is going to close. Oh wow, nice, right? So we just skipped the candle. We skipped the candle in a way to say, okay, you know what, this trade was based on the 4 hour time frame, so we're just gonna, like, you know, we're just gonna wait for the next 1 hour or whatever to close, right? And this trade is running at about 82 pips at this point. Looking on the 1 hour, we broke down, filled the wick over here. Probably gonna close the entire, like, you know, more 90%, and oh, actually the whole trade got closed out because we had nothing else left to close. So perfect, right? Oh wow, rejection over here. See, wick gets filled and we rejection because we rejected this area before as well. Damn. Oh wow, crazy. What was this, news? Oh yeah, we had some news over here. Home sales. This happened later on. Damn, insane. Our position would have still be in over here. The runner would have still been running almost more than 100 pips. Wow, crazy move over here. All right, perfect. Let's move on to the next one right here now. Let's move on to the next session. Let's pause this. Okay. So we're going to move on towards 80. Oh, wow. Look, we came all the way down over here. 830 right here. Perfect, right? New day, new analysis. So we're going to move all zones from this point. So previous trade was very simple, right? First, we executed based on the 30-minute candle closing below support. Next, we executed based on the 4-hour visualization where we think where price can go, and then we executed based on 1-hour price action. Control B to close all objects. Oh, okay. Control B. Oh, nice. Nice. Didn't know this. See, I'm not a professional. Delete, 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 delete. Perfect. 4-hour here as well. 4-hour is okay, right? Okay, it's perfect. So let's take a look on the daily time frame. Looking at the daily, damn, Daniel, we're coming down over here. Daily is, we have a support at 18, what's this, 1895. We can continue down towards 1895. Daily candle is coming down, very, very strong, clean candle to the left hand side. Obviously, bias is bearish over here. Looking on the 4-hour time frame, this 4-hour candle, I think it just started. Looking on the 4-hour to the left hand side, we have this range to fill at 1701. If we measure this range, this is a 56 pip range. So there's a probability we can maybe, like, you know, get this trade over here to continue down. Obviously, bias is bearish over here. Looking on the 1-hour time frame, a 1-hour has basically created a resistance, right? We have possibly breaking below this area here at this point. So now we got to identify, let's see here. Oh, gotta get some view and charts. Do this. Let's look to the left hand side. So we got this wick to fill on the 1-hour time frame. If price comes down, we got this wick to fill, which is around 45 some pips away. Okay, awesome, right? Let's clone this all the way to the left hand side. And now what we got to do is we got to take a look on the 30-minute time frame and see what's going on. So looking on the 30-minute, oh, nice, beautiful. So we're creating this low here on the 30-minute time frame. We broke below a support. So this means if we can break below 1705, then there's a high possibility for price to continue on moving bearish, right? That's something that can happen over here. So let's take a look on the 1-hour time frame. 1-hour candles did come down. So now we're looking to see if we can get some sort of confirmation for price to continue on moving down or not, right? Because if we can get some more confirmations for price to continue down, I think that's going to be a much better trade for price to continue getting towards, you know, 1702, and we can continue on further down from that point. So let's see how the next candle starts and opens. If we can break below the low of the 1-hour time frame, then we can get a move moving down, right? That's all what we want. We want a break of the low of this current. Oh, will this happen on 30-minute? Oh, 30 minutes still open over here. 1-hour candle is still forming at this point now. We want this 1-hour candle to break its own low, because if we can break its own low, I think that's going to be a much higher probability that we can continue moving down. So we're going to wait to see if we can break its own low. Very, very tricky situation. Are we going to break the low, or are we going to just range over here? The candle is about to close. Let's forward this candle. Oh, perfect. We're ranging at this point now. We are in a range. We have established a range. So now we got to break out of this range. We have successfully established a range. Very, very delicate situation here. We have a support on the 30-minute. We have a resistance on the 30-minute here. Yeah, we're just in a range over here. Yeah, we're just ranging at this point now, guys. Nothing's happening. Look, 1 hour's ranging. Let's forward this to the London Open. London Open, 30-minute is at support. 1 hour time frame looks like it's breaking down, right? If it looks like it's breaking down, what's this? Would you say a good range is in gold? Sorry, was kind of late if it has been mentioned. A good range, what would you say? Yeah, 20 to 30 pips is a good range. So looking on the 30-minute time frame, if we can break below support, we can continue on moving down. Oh, looks like Mr. Shahid is having some issues over here. So we're going to remove this. And let's do this. Disable participant annotations. Okay. Yeah, so 30-minute has to break above resistance and to break below support to indicate where it's going to go. or the 1 hour candle has to print some weak bullish candles to indicate if we can break the lows that we can go down. But unless that happens, we're not going anywhere. Oh wow, look at that. 30-minute candle is actually breaking the high over here. London Open. London Open breaking the high. Let's see where this 30-minute candle is going to close. Let's forward this candle because we got to see where it's going to close. It closed back in the range. Interesting. Nothing's happening over here now. We need a candle to close above this area on the 30-minute time frame. So remember, we're only looking at the 30-minute candle confirmations. That's it. We're only looking at the 30-minute candle confirmations. Let's see how this 30-minute candle is going to close. Closed above this area. Perfect. Right? Let's take a look on the 1 hour time frame. 1 hour. Oh, see how this is forming? 30-minute candle is closing above this area, right? But the 1 hour candle is closing below this resistance. So still, it's very, very difficult to say where price is going to go. 4 hour time frame is still open over here. Very, very, very difficult. Unless we can break this high to continue up. Yeah, if we can break that 30-minute high, I think that's going to be a good impulse entry. Oh, we missed it. We missed it. Actually, let's go back. Can we go back? Yeah, we can go back. Yeah. Because we want to take that trade. Once we break the high, I think we can continue up to fill the wick. Right over here. So we're going to take a buy at this point. Oh, is this a buy over here? Cancel. We want to take a buy. Stop is going to be below this candle. And we're looking at price to continue up to fill this wick. That's all what we're looking at. All right, 2 pips, 3 pips. Ooh, retracing, retracing. Retracing, mayday, mayday, mayday. We've broken the high, we should fill the wick. 7 pips. Oh, 9, 10 pips over here. Very nice. Close partials, close 90%. Close 90%. Let's take away the take profit, put stops at break even in case we continue moving bullish. So see how the 1 hour candle was at resistance, but on the 30-minute we had some confirmations, right? We waited for price to wick down and then break the high. Impulse entry. We broke the high, took the trade, stop was below the current candle, and we're now anticipating it to, if it breaks the wick, then we can continue moving up towards, oh, another 27 pips over here we can get. Oh, we got stopped out. Our runner got stopped out. It's okay. We're at 5% at this point now. Let's see how this 30-minute candle closes. 1 hour candle. Oh, wow. Look at that. Almost seems like it's closing back in the range. Safe to say once the candle makes a wick and breaks the previous candle higher or low, it should come back to break its own higher or low. Yes. It shouldn't. Yes, that's true. It shouldn't. So it seems like we broke above this 30-minute resistance, and the bullish move now depends on this 30-minute candle. If it closes back, oh yeah, it broke the lower right here. It's now coming back in the range. If it closes back in the range, then there are no buys. Then there are no more buys. Oh yeah, there are no more buys at this point now. See, it's very important to secure profits. It's a good thing we secured profits. Let's wait to see how this candle closes. Oh, holy, candle closed below this area here now. All right, so if we can break the low, then I guess we can continue on moving bearish, and we can continue moving bearish to 1720, 1701, 1702. Perfect. 1 hour candle still ranging here now. We have to wait to see how this candle is going to form. Are we going to break the low? Are we going to continue down? I would want to see a candle close below this area, to be honest. Close below this area here. That's what I want to see. Because wicking down doesn't mean anything. We want to see a candle close below this area. Let's see how this 30-minute candle closes. 30-minute candle closed bullish. We want a candle to close below that area. Let's see how the next 30-minute candle closes. We close bearish over here. Let's take a look on the 1 hour time frame. 1 hour candle is closing a weak bullish candle. Ranging. I want to see it where we will have a big breakout. We're moving into pre-New York right now. I really want to see where we're going to have a big breakout over here. Let's move on to the next 30-minute candle. Man, this is just moving up over. This is what a joke gold is over here. Up and down, up and down. Got one trade over here, small trade. Let's see how this 30-minute candle closes. 30-minute candle is closing within this range. Let's see how the next 30-minute candle closes. So see, the way, like the reason we're skipping candles is because we want to see, hey, Normie, wake up. Yes, yes, yes. We want you here. All right. So we want to see how the next 30-minute candle closes, right? So price is ranging. So we see price is ranging, so Normie went to bed. So boring, right? So we want to see how the next 30-minute candle is going to close. All right, there we go. 30-minute candle is closing like this, still ranging. 1 hour can, man, this looks okay. Now I want everyone's help over here, right? So now this is the question that was asked when the simulation started, right? The question was, what's the most important thing to look at? And I said the most important thing to look at is the time of volume. So if you look at the time, right, pre-London had no volume, right? If we had volume, we would have seen big candles forming. London Open had no volume. We had some wicks over here. Nothing happened. Now we're moving into pre-New York and New York Open. So we can anticipate volume in pre-New York and New York Open at this time, right? And the only way I think there's going to be volume is now if you look on the 30-minute time frame, 30-minute is just consolidating over here. It's very ugly. I mean, it's very, very difficult to see where price is going to go. Looking on the 4-hour time frame, 4 hours still open. 4-hour broke the high, didn't broke the low. But if we look on the daily, daily has a very high probability to continue down. We all can agree with that, right? The bias is down based on daily time frame. We're just consolidating on the 30-minute to see where price is going to go. Now, looking on the 1-hour time frame, a lot of you guys have seen this happen before. If the next 1-hour candle breaks the low of this weak bullish candle with a huge rejection, there's a probability we can continue moving down. We've seen this before in the charts, right? So let's see over here. So what I'm going to do is I'm probably going to use a lower risk 1% if we break the low over here on the 1-hour time frame to continue down. That's all we're going to do. But we first want it to wick up, so that's going to be a stop at that point if we can wick up. All right. We just wanted to break the low of the previous 1-hour candle because we're moving into a high volume time now. And when we move into high volume time, we're anticipating volume to come in. Let's take a look if we have any news over here. We have no news for the USD. Beautiful. No news for the USD. We just want the previous low to be broken so we can anticipate volume in the NY to continue driving price. So right now, there's nothing happening. Oh, there we go. We've broken the low. So we're going to use less risk over here. We're going to put stops above this current candle around 17 pips. Probably going to, remove TP from this point and just secure around 15 pips and let the rest run. So we've broken the low on the 1-hour time frame. We're anticipating the daily to continue driving down. 4-hour is whatever. Oh, yeah, I think this was a very early entry. Shouldn't have done that. 30-minute is still rejecting here. Uh-oh. But the 1-hour should continue driving down. If this is high volume time, moving closer to NY. So look, NY Open is going to start here very, very soon. Look, NY Open is going to start in about 30 minutes, right? So we're anticipating volume to build up into NY Open. Okay, perfect. So we're kind of, oh, nice, nice. There we go. That's the break we were looking at. That is the break we were looking at, mate. We're coming down 17 pips over here. So we're going to close partials. We're going to close about 90%, and we're going to leave the rest running. So this was the second trade in this Wednesday over here. I wonder where the Suzuki is. The guy told me he's going to call me in about 10 minutes. Oh, beautiful, nice. See, so we've reached this support. Looking on the daily, we're coming down to this area now. I think we can go to 1699. We have like 1.1. Yeah, we have 1.1 running, whatever. So we're reaching this resistance here. Oh, this support, sorry. Let's see if we can tap into this support as we move into volume. closer to NY Open. 1701. Oh, beautiful. We've tapped this area. 44 pips over here. So close this position and yeah, nice. Let's see how this candle closes. Oh, no way. What? This tapped into 1697, the daily support. Nice. Beautiful. Very, very, very nicely done over here. Nice move over here. 30-minute candle. Even if we would have taken the trade on the 30-minute, I think we could have added a position while we broke the low for price to continue down. Beautiful. Good thing I'm catching the same trades in the simulation which I caught in the live sessions. All right. Oh, excuse me. Okay, so let's move on to the next. Actually, I'm going to be back. I'll go get some water. All right. Okay. So should you just focus on trading gold during London? It's not about should you do something strictly. It's about, oh, damn, moved down to 1693. The daily tapped into that support. Nice. See, daily was bearish, just had some roadblocks on a 30-minute, and then obviously, like, volume came in the New York, and then we moved down. It depends on what time is going to suit you best with your lifestyle. For me, London session suits me best right now because like the time zones and the things I do during the day, that just London session suits me better. New York session doesn't suit me better. I mean, gold still moves in New York a lot. Like, look at this move on gold in New York. London just ranged. I mean, if I was trading, let's say London, I would have been just taking just one trade on gold, and that was about it. And then New York just came in with the volume. Look, we broke the support, and we just continued further down. All right, so let's move on to the next one here. Man, my voice is going over here now. Okay. Damn, straight rejection over here. New York has all impulse moves. Yeah. It's just reversals. All right, let's move on towards Thursday. So Thursday, we're moving into Thursday now. Thursday is going to be the last simulation day over here that we're going to do. Got to get some work down here pretty soon. But this is actually very, very enjoyable here now. Okay, so 8:30 right here. All right. So we're looking at 28 May over here, 8:30. So let's take an hour and a half before the London session, looking at the daily straight rejected that area, like a complete rejection of that area. So if we're rejecting this area, we're breaking the high of the previous daily candle. I think there's a very, very high probability we can continue moving up. Simple, right? Just by looking at this, straight rejection means we can continue moving bullish. We just got to see if we can get that confirmation on the excuse me, the 4-hour time frame and all those time frames there. Okay, so looking on the 4-hour, this looks so better, looks so amazing. Look at this. We broke above resistance on the 4-hour. What's the probability the next 4 hours is going to continue moving up? Tell me, what's the probability it can move up? Only on the 4-hour, not looking on the 30-minute or the 1-hour time frame. We're creating a bias at this point now, right? 4-hour is screaming bias. It's just, I think, making a lower wick to break the high to continue up. That's all what it's trying to do, right? So we're going to put a blue line over here. So this is the high of the 4-hour. So we're going to take two trades, right? One is going to be based on the 1-hour and 30-minute. The second one is going to be based on the 4-hour breaking the high to continue up. So we're going to clone this over to the 1-hour time frame. Very easy, clean candles to the left hand side, whatever, right? All right, so let's take a look on the 1-hour time frame here. 1 hour is kind of rejecting at this point. We came down, we formed like a bullish candle, bearish, bullish. This new 1-hour candle is forming at this point. We don't know how it's going to form. I think this is sort of like a minor resistance over here. I mean, guys, this could be a very easy trade, right? All we need to see is a minor support form, and then just take a buy, and price just goes up, and we win the trade. That's all what we want to see at this point. So let's take a look on 30-minute time frame. Yeah, 30 minutes also kind of like retracing, which is good because look, bias is bullish, range is up. We made a high. All we need to see is a support form. If we can form support, then we can just move up. That's it. That's all we want to see. So this is going to be full retard buys over here. Hold on. We're breaking the high over here. Is this the point that we can continue moving bullish? Let's take a look over here. Looking on the 1 hour time frame, looking on 30-minute time frame. If we can take a buy over here, our stop is going to be 20 pips. 20 pip stop. Does this make sense? Let's see here. Let's take a buy. Oh wow, way bigger than 20 pips. Way bigger than 20. So that's why, so we're going to use a 1% risk over here. And the reason why we're going to use a 1% risk, because then we can add positions to this trade here as well. So we're going to remove take profit. So this is a dynamic risk entry, right? So we can add positions to this trade as well later on. So that's why we're using this risk right here. Four pips, 3 pips, 5 pips, 4 pips. Oh, 8 pips. We're still up a lot. We're up above the target we had. Our target was around 5%. Oh, 11 pips over here. Beautiful. So we're going to close 90%. Close. Looking at the 30-minute time frame, we're going to put stops at break even, and we're going to let the rest run. And then we're going to see if we can possibly, add positions to this trade to continue bullish or not. Looking on the 4 hour, we still have a lot of room to go on the 4 hour, man. A lot of room to go on the 4 hour. So we're going to see if we can continue. Oh, 16, 17 pips over here. Very nice. So let's see how this candle closes. Candle closed bullish. Looking on the 30-minute time frame, 30 minutes still bullish. It does seem like there's a bit of a retracement coming in, so we got to be very mindful of that. Oh wow, 220 pips over here. Nice. Pretty good move. Pretty good move. See, so we used less risk when we broke the high because we were actually buying the high at that point, right? That's why we lowered our risk to 1%. If we created a support, and let's say if this candle closed if this candle closed, let's say something like, hold on, what the hell? Something right over here, right? If we had to close something like that, right here, then we would have taken full margin buys, because then we would have been like, oh yeah, perfect. We got a candle closing bullish, we got a wick to fill, we got the whole fucking range to fill, and we can go all the way back up. But it didn't happen, right? Candle broke the high, so we were actually buying the high at that point. So we basically tried to be a little bit risk averse, so used a lower risk at that point. So, trade is still open. Let's see how this candle closes. We're still bullish over here. Let's see the next candle. Next candle is coming bearish over here, sort of like creating another high at that point to possibly make a support to continue moving up, right? Beautiful. So let's see if we can create a support to go up. If this was real, when we are up for this week, is it a good idea to break even at 10 to 15 pips and let the whole position to TP? If this was real, I would have still done what I'm doing at this point, because if I would have had a position right down over here, then we would have let the whole position run, right? But since that didn't happen, so it basically, we didn't do that. All right. This 1 hour candle is going to close. 30-minute candle is going to close. Let's see how this 30-minute candle closes. Ooh, 30 minutes went up. Up and up and up. Crazy. Look at this. Up, down, down, and up. So this is an example of a volatile candle. A volatile candle is a candle which breaks the high and breaks the low of the previous candles. That's a volatile candle. So looking on the 1 hour time frame, see, 1 hour is a very volatile candle. It broke the high and it broke the low. So rule of thumb for me is to wait for the volatile candle to close. So we're going to move to the next candle. See, volatile candle closed like this. Looking on the 30-minute time frame, 30-minute is still now consolidating at this point. I guess looking on the 4 hour, yeah, we still have room to go up to 1725. I think we can tap into that area. 1723, even we're at 1718. So I guess we need some more confirmations over here to take a buy. So we gotta wait to see how the 30-minute candle is gonna close. 30-minute candle has closed bullish. Damn, look at this consolidation over here. Consolidating, moving up, consolidating, moving up. Very, very difficult. Very, very, very difficult. 1 hour candle is about to close over here too. Let's see how the 1 hour candle is gonna close. Because we sort of have like a resistance forming right over here, right? Because look, we had a resistance is formed when you have a bullish candle followed by a bearish candle. So this bearish candle formed resistance. Next candle was a weak bullish candle, right? It closed with a big rejection. So now we want to see how this 1 hour candle is going to close. If this 1 hour candle closes a solid bullish candle, then basically we're closing above this resistance here, and then there's a high probability for price to continue moving bullish. So let's forward to the next candle, see how it closes. Perfect. See, this candle has closed bullish now. Looking at the 30-minute, 30-minute is whatever. Daily candle still has some room to go up. Daily candle can continue up towards 1724, 1723. This area it broke down. Looking on the 4 hour, 4 hour still has room to go up. New 4 hour candle is about to start. 1 hour candle can obviously now continue up to fill this wick and continue further since we broke above this area. So I think it's going to be a, let's take another, since this is the last trade, let's do a 2% risk over here. 2% risk stops below the 1 hour candle, sort of like below that range, and aiming for price to continue bullish and see if we can wick down and then continue up to fill the wick and break the wick up and then continue solid bullish over here. I think 1723 could be a very, very good target. That's like 28, 29 pips away. So we'll see if we can add a position, right? And the way we're going to be adding a position is going to be, we made a lower wick, and then if we break the high, that's going to be the point to add position because we're moving into pre-New York at this point. This starts the new 4 hour candle. And if you look on the 4 hour candle, I guess 4 hour can continue up if it breaks its own high. So this is the condition to add another position. If you can break, if this 1 hour candle can break its own high, right? Got to break its own high for us to add a position. And that position's stop loss is going to be below the current 1 hour candle. So see, it's still twitching around. If it breaks its own, our stop loss is 20 pips. We take 10 pip TP, is that negative RR, but everything is very, very nice so far. Yeah, so basically, if it reaches 10 pips, we're going to be closing 50% of the position, right? Negative 10 pips. We're going to be closing 50% right there. So it is negative RR, but we're managing risk once it reaches negative 10 pips, right? Also, we're going to be managing risk if it breaks its own low. Right now, it's not breaking its own low. It's not breaking its own high. There we go. It's breaking its own high at this point. This is where we're adding another risk, which is going to be a 1% risk. We're adding a risk. Stops are now below this 1 hour candle. TP, we're going to keep it at, let's keep it at, yeah, right there, 1723. Right there is fine. And we're going to be modifying this stop loss and keeping it below the 1 hour candle here as well. We're only looking at the 1 hour time frame. 30-minute is kind of messy, so we're only focused on the 1 hour time frame here. All right, the repetition is on the line here now. We have clean traffic to the left-hand side. Everything is screaming buys. 4 hour candle is screaming buys. Daily is screaming buys. Gold should keep my reputation and continue moving bullish. That's the whole goal. We're only looking at the 1 hour time frame. That's it. This is what I've been trading gold based off of the high time frames in the past 2-3 weeks. getting those, 40 pip gains, 50 pip gains. Oh, nice. Look at that. We're moving up over here now. Nice. Very, very nice. Our goal was around 20%, but if we hit 10%, that would have been pretty good. I guess we're going to hit 10% over here. Almost. Candle is about to close in about 15-20 minutes. Oh, nice. Oh, man, we smashed through this area. Holy. All right, let's close everything over here. Oh, wow. As soon as DP said secure profit, price just went boom. Amazing. Yeah, I guess let's see where this candle goes there now. Okay, well, finally we did go up to fill this range over here, 1726. Still pretty good. Very nice. Awesome. Perfect. Everyone, thank you so much for tuning in. My Suzuki Dabba is on its way here now, so we're going to help him move stuff. So this recording is going to be in the database in the next 4 to 5 hours. It's going to take some time to buffer. We have not kind of a good internet over here, so it's going to take that much time. So we're probably gonna see you probably Tuesday or Wednesday for the live stream. Right? Take care, everyone. Have a great weekend. We will see you soon.